think we've been clear that we were intending to pay just one interim dividend this year and a final dividend at the end of the year. I think we'll review whether or not we go back to quarterly dividends at the beginning of next year. But our capital position is very strong. We're at 15.9%. We want to have our capital back to 14 to 14.5% by the end of next year. We don't want to sit on excess capital if we have it, and hence the $2 billion buyback, which is around about 10 cents a share.
Got to talk about the big elephant in the room, and that is Evergrande. Can you share with us your exposure at HSBC to Evergrande, and has there been any fallout from a material impact of that? What type of actions has HSBC taken to limit the exposure?
We don't have any direct exposure to any of the red list Chinese property companies. We're reasonably conservative in our approach to lending to that sector, have been for some time. So overall, we are going through what the second order implications could be for the supply chain borrowers. But overall, I think we're very comfortable at this point with where we stand in relation to the Chinese real estate sector.
You don't fear that there could be?
You should read into that confidence that we're announcing a $2 billion buyback today, which is consistent with how we're feeling at the moment.
Yeah, absolutely. So you're not in the camp that fears that there could be some broader contagion effects as a result of Evergrande. Then, if we do, of course, see more adverse fallout as a result of the debt woes that it's facing.
No. We are going to be cautious, but I think overall we're comfortable with where we stand, at least in relation to our exposures to the sector, and whatever fallout may come from that.